Hey, my name is James Wilkinson and welcome to this channel. Now in this video we're going to talk about, will there be a housing crash in 2022? What does the market data tell us? Well, I've been reading a really interesting article on Zoopla this afternoon, and I want to go into a little bit more detail about what they're saying, and does that mean there is going to be a crash? Now, this channel is all about my property investment journey. I'm an investor in the south of England. I also invest in the north of England and a little bit in London. And I want to take you on that journey with me so you can see the good, the bad, and the ugly on property investing. Now, more interestingly, I'm actually investing for my two daughters. Georgia is 21. We have just bought our first house in Doncaster. There's videos on the channel. You can check that out, see how that went. Just about to complete on our second house. You'll see some videos on that in 2 weeks. So do subscribe to see those. And my little baby Emily as well. So we're going to be building a portfolio for those two girls, and we'll show you all about how that works. So how can you join us on the journey? Very easily, take that finger of power, smash that subscribe button right there. Go on, do it right now. Smash that subscribe button, hit the bell, and then you'll get notified on all of the new stuff. Now, here's a few things that I want to share with you. So I will have to look down a few times because I want to make sure that I get this right. So first and foremost is house, like the numbers, they're not as overvalued as they were in 2007, leading into 2008 and 2009, the crash. You see, what was happening back in 2007 is it was very easy to get a mortgage. And I remember at the time going to my mortgage broker, and they had these mortgages back then called self-certification, right? You could literally tell the mortgage broker how much you earned, and no one really did any checks on that, right? And that meant that for particularly self-employed people that maybe didn't declare all their income, they were still able to get really, really good properties very, very easily. And so that came round to bite the banks in the backside when the crash happened and people stopped paying their mortgages. Now, another thing that was happening back in 2007 was 100% mortgages, but not only 100% mortgages. I forgot about this, but a friend of mine just told me the other day he had 110% mortgage, meaning they gave you money for like the deposit and renovations and all sorts of stuff. They were so confident that house prices were going to go up, right? And so some people had 110% mortgages. Now, we don't have those in this market. Mortgage lending has got a lot stricter over the last few years. Tell me about it, right? I think I've done 6 mortgages this year so far, and it's taken ages, right? They check everything, right? Whereas when I started out in property investing, you literally gave your passport, gave your bank statements for a little check and proving your address, basically, and then they chucked money at you. It was easier, but it did mean that people were borrowing that couldn't afford to borrow, and that's why the market had that big crash. So we're not as overvalued as we were in 2007. So that's one thing that Zoopla is saying here. Now, this one's interesting. Now, in 2007, the big rises were, a lot of them were in the southeast, right? And it's not something that's happened where house price values have gone up all over the UK. So that's what's happened in the pandemic, is prices have gone up in the north, in the southwest, southeast, northeast, northwest. They've gone up all over the country, whereas previous big rises in property prices have been like in things like London and the southeast, and those places got hit quite hard. And so it's more staggered over the whole country, which is interesting to see. And that's because of the pandemic. Now, because of the pandemic, people's lifestyles have changed dramatically. I've got friends that are in very sophisticated jobs, for example, stockbrokers, that used to have to get up at stupid o'clock, 5 o'clock, to get up to London and be in the office on the trading floor and be able to trade there. And now they do it at home. right? And so people would rather do that. So people are willing to take that money that they would have spent on commuting and put that into new houses, and they want a bigger house because of that if they can afford it, right? And so that's meant that some people's lifestyles have changed dramatically, and there was a drop in house prices in the pandemic in London, right? Because people didn't want to be in small little flats in London. They wanted to be in nice places with countryside and somewhere they could go for a walk. And that's why I never invested with this intention happening, but I've got properties in Hastings, which for years was like a really slow burner, did go up in value, but never shot up in value. But then in the pandemic, because everyone wanted to be by the coast, the prices shot through the roof, and they're still been doing pretty good since. And so that is really, really important here. So yeah, more people are working from home. Also, a lot of people retired. That's why there's actually in this, well, we're not officially in a recession, but kind of feels like we are in a recession. And there's still a lot of jobs about though, right? And that's because some people have retired early that could. And that means that people need to fill those jobs, and there isn't enough skilled people to do that. And so maybe they're retiring and they're downsizing and moving around. So there's a lot of movement around the country, which means there's still more transactions than normal. Even though it's slowing down, there is still more transactions. So that's good to potentially stave off some sort of crash. Now, in the last couple of years, with surveys, a quarter of people have said that they want to move, but only 1 in 17 did move. So potentially there's still some pent-up demand with people that are looking for new property. So let's see what else they've been talking about here. Economic cycles as well. With the properties, you normally get a crash every 18 years. We're still a little way off that. So that's about 3 or 4 years. So potentially that's another reason why the house prices might not drop significantly. Look, none of this is set in stone. None of us can say for certain, is the market going to drop massively in the next few weeks or months? No one knows for sure. So let's see what else they were talking about. And yeah, hybrid working, they're saying, is here to stay. So like I said, I've got people that are stockbrokers that would never have been allowed to work from home, but now their companies have got a secure way. Technology's advanced, so they can securely trade at home, and they don't need to go into London, which significantly reduces their day and means that like they want a nicer house to live in, right? Because they're going to be there more often. First-time buyers are very motivated. There's some schemes and stuff like that that are out there. That is going to fuel the market as well and keep people in there. And so what else? More people are retiring. Mortgage rates are rising. So that's something that is going to definitely slow the market down, but they're not at silly rates. Like if you look at the rates before 2008, they were a lot more than we're currently on now with the 1.75% base rate that we've got with the Bank of England. So is the market going to crash? Is it going to turn? I don't know. You don't know. But Zoopla is saying that there's a lot that means that the market is probably going to be fairly stable for the rest of 2022. We're in August. It'll be September before you know it. And so probably the rest of this year, we're going to have that stability. Like we've seen different videos on this channel this month where we've said, look, there was a rise in properties, and another place was saying that there was a drop in properties, but each of those was 0.1%, right? 0.1%, 0.1%. So it was pretty much negligible. That really, you wouldn't notice that when selling, and you'd probably negotiate more than 1% off your house anyway. So it really depends if you're a good negotiator and if what you're looking for. So I don't think the market, I agree with that Zoopla article. I think the market is fairly stable. I think that could be something that changes next year. And so I'm suggesting to anyone that I know that wants certainty, just get a fixed 5-year mortgage now, and then you'll know what you're going to be paying for the next few years. If the market goes down 10%, doesn't matter. As long as you're not looking to sell, it doesn't matter. If you're an investor like me, 10% drop could be a very good opportunity for you. That means there's going to be more opportunities. Properties have been bid up for the last 2 years. It's been really hard to find good deals, and so more good deals will be coming back on the market. That's a good thing. And so we as investors need to be looking for those and making sure we grab as many as we can. Now, I hope you found that interesting. What do you think about the market? Do you think it's going to go up, down, sideways, crash? What do you think? Do comment below. If you want to come to my live event in London, you can get yourself on the VIP list to grab a free ticket. I'm going to put a link in the description here. So click on that link, guys, and grab yourself a free copy I can't even speak. Get yourself in the VIP list, right? And then you'll know when that comes out. Do check out the other videos. As I said, we finished our property in Doncaster. See how that all went. And do go and check out this video right here.